Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at XRP and just XRP. Normally I'd be looking at several altcoins as I go, but the thing is today we've got quite a lot to talk about with this one asset where a count that we've been looking at for a long time is on the verge of being invalidated, and we need to figure out an alternative. And it's taken me quite a long time, but I think I've got something. I'm not fully convinced of it by any stretch of the imagination, but I think I've got something at least. So, quick recap of the current count as we've been seeing it for months now. I'm saying we topped here in a wave 1 at intermediate degree, and that we've come down to here in a wave 2 at intermediate degree. We've had an impulse here at minor degree, and we're coming down in a double zigzag to 2 here, and we've bottomed. Okay, now I'm going to say bottomed because if we don't come down, if we come down any lower, we're going to break these lows and this count's invalid anyway. Alright, so if this count's correct, we have to have bottomed now, and we're going to come out of here and work our way higher. Now, I'm not saying that's what's happened, I'm just saying if this count is going to survive, that's what we need to see. Okay, let's just take a regression channel here for a moment and run it down from this height. As you can see, we're still trending lower. If we bring this up to the previous height, we're still well within 2 standard deviations of the mean here. We did recently reach the bottom of the regression channel here. If we look at what we've retraced from the low to the high, we've come straight to the 89% fib retracement level. Let's just be precise, and you can see how down here we've broken it. Right, we've whipped through it, bodied around it, and we're just hanging on it like by the thread, by the skin of our teeth, hanging here at 90% retracement. And it's now or never for this count. We either come out of here or we break this and this count's invalid, in which case we have to have the new alternative. So that's the current count as I see it. Now there's problems with this, and there's been problems with this since day one. Well, not since day one, but since it became obvious. I've been saying it's an extension, right? So let's switch into log and have a look at this thing. Now each of these corrections, primary into intermediate into minor is smaller in price correction than intermediate. Intermediate is smaller in price correction than primary. However, they are the inverse of that in time. Primary is shorter than intermediate in time. Intermediate is shorter than minor in time. This is a bit peculiar. It's not a rule though. You're not breaking a rule by observing that. It's just peculiar. Okay, we don't expect to see it. We wouldn't really look for it normally, but this is the count as it is that made the most sense going into this high. I've now come up with an alternate way of getting to this high in a single move and making it a larger one, getting rid of this extension problem. And that's where the next count comes from, getting up here in an impulsive, in a motive move, not impulsive. Excuse me. And then working our way from there. So that's the current count. Do or die, now or never. Get out of here, complete an extension and begin the 3 at minor degree, of the 3 at intermediate degree, of the 3 at primary degree, and it's MOON time. Okay, but if we don't get out of here and we break these lows, then it's definitely not moon time. Well, not now at least. Will be eventually, but it's not now. So that's the current count. So before I go on to present the new count, which explains the breaking of these lows, let's take a step back and look at the bigger picture for a moment. So I'm just going to get rid of that interpretation. So long term, there's several ways of looking at this. Of either saying that, you know, this is 1 and this is 2 and this was 3 and this was 4 and this was 1. It's cycle degree. You see what I'm saying? Primary 1, 2, 3, 4, 5, very long 2, very short 4. Now I never liked the relationship of such a massive wave here, such a small wave here, so I'd rather there be a wave in between. You've also got the option of saying 1, 2, 1, 2. and it's a gigantic extension, cycle wave 2 into primary wave 1, 2. Okay, that seems insane, extremely bullish. There's also this interpretation, which is just simpler, which is we've had 1 and 2, we've had with 3 and 4, and now we're going to have 5. Okay, I'm not sure which is correct. 1, 2, 1, 2 could be right. 1, 2, 3, 4, 5 could be right. But either way, what I've noticed is we do have subdivision here in the 3, which works. And there's a triangular wave 4 joined with a zigzag in 2, so there's alternation there. Okay, which is okay as well. And 3 is not the shortest. Right. It may look it here in log, but I guarantee you come down into arithmetic and that's a massive move. Okay, so it's not shorter. And when it comes to measuring lengths, that's the scale that matters. It may even be shorter in, may even be longer in log. I don't think it is, but let me just demonstrate what I mean. Zoom in on the area. Here's 1, 2, here's 3, 4. So it's massive, right? Clearly. Just doesn't look it when we adjust into log. So please keep that in mind. I'm always open to criticism, but if somebody says, oh, your wave 3 is too short, just stop and think, what scale is he looking at the chart in? Alright? So I find this quite compelling because this is about the right size to be married to this. However, there doesn't appear to be, time alternation. There is some, as in 2 is 1,148 days long, and 4 is 798. It is shorter, but structurally, it would have been nice to see zigzag and a flat, or zigzag and a triangle, or combination and a triangle, or whatever. So there is an argument to suggest that maybe 3 isn't in, and 4 isn't in, and they are up here, and this is 1, 2, 1, 2. Okay, and that would account for the lack of time differential and the lack of structural difference between these two. So that is the uber bullish situation, and it is possible, but I'm just going to keep this labelling for simplicity at the moment. Now the next thing I want to point out is this. No, that's not the right one. Bear with me. I've got long-term log channel. There we go. So what I've done here is just taken this pivot, this one, and this one, and this is what we end up with. 2 points of contact on the bottom, 2 points of contact on the top, and the price action held within a channel. We are very close to testing it again. Very, very close. And as the support lines I've got here demonstrate, this is taking in a whole bunch of highs and lows here, and this is taking in a whole bunch of highs and lows going back a long time. Okay, those two support levels. We're right around support, right around the edge of this long-term channel. Like I said, it's very much now or never for that primary count we were looking at. The corrective count allows us to come a bit lower, potentially significantly lower, but if we do, we break this long-term channel, and I can't imagine that being good news for the price, if I'm absolutely honest. At which point we would then have to come back and have two counts, one, the new one I'm going to share with you momentarily, and an even more bearish one, which is something like that, which is we're going to come back to create new lows beyond the March 20 low. Right. Brutal, but a possibility. But we'll cross that bridge as and when we need to deal with it. In the meantime, let's look at the alternative count for getting up to this high. So this is called my wave 2 count. So now let's come in and zoom in on everything from the March 20 low. Still on the week time frame, so you can't necessarily see all the zigzag clearly. Some of them are more clear than others, but it's essentially what I'm talking about here is a leading expanding diagonal completing in a primary one. So instead of the extension idea where we're building a series of 1s and 2s, we just come up in a 1, 2, 3, 4, 5. Now the 4 is bigger than the 2, the 3 is bigger than the 1, and the 5 is bigger than the 3. So it fulfills all the rules for an expanding diagonal. Okay, we are in log, but if you come off of log, it's even clearer as following the rules in arithmetic. Okay, and we get the necessary overlap of 4 over 1. So yeah, we got the necessary overlap as I mentioned, and 4 does not come back beyond 2, believe it or not. It is mightily close, but it's not going beyond it. Let me just show you, I'll prove it to you. Come down to the low, we'll zoom in on this 4. Doesn't transgress beyond where the 2 completed. So yeah, it's an extreme move here in the 4, but it's legal. Okay, so I'm sticking with it. And gotta find alternatives. The rest of the structure is fine. 3 is longer than 1, 4 is deeper than 2, 5 is longer than 3, 4 overlaps 1, but doesn't go beyond 2. Just. And that's the best I've been able to do with it. So, we've got a 1. Whoop-de-doo. Now we've got to get back in a 2. So let's come off of log. Now let's come down to the day time frame and let's throw a fib retracement on the chart here. So, and we'll hide these trend lines as I've already pointed out the expanding diagonal structure. We'll keep this lower trend line in place. I'll even adjust it slightly. There we go. Okay. So what have we retraced so far if this is a 1 up here at primary degree? I'm sorry, that is the Discord that's beeping. I will exit it now. And I will switch it off. There we go. Sorry about that. I know it could be. I know you'll all be checking your Discord, won't you? 1, 2, 3, 4, 5 into 1. So how have we gotten down from the high? Now this is tricky, and it's going to remain tricky. Come back to the 78.6 here. Come back to the 78.6 almost here. Could come deeper to the 89. Right, roughly where I'm expecting it to be. To come back to this really deep level here. That would invalidate our bullish count, our primary bullish count, and replace it with this. However, that long-term channel that we looked at could be in jeopardy, so we just have to be aware of that as well. Not an ideal situation. If we come into log scale, we can see that we're almost back at the 50. Now, I like this, because if I bring up the support structures, you can see how there's a lot of confluence building up here between previous lows, 50% retracement, and other support structures as well, all in this area. So that would be a acceptable place to bottom. I think coming to the 50 could be all we need to do to break this. It would be just enough to break the lows and make everyone bearish, and then can you imagine just bouncing from it? It would just screw everybody over, wouldn't it? So sometimes I like to look at the scenario that's just going to confuse and hurt the most people, and that one will really mess people up. You break primary lows, everyone becomes bearish, shorts and they end up shorting the low, and then pop. Not saying it's going to happen, I've seen it before. Alright, so how do we get down here off of the high? Now, like I said, this is tricky. Alright, so I've got a 3 wave move into a W. And then I've gone A, 3 waves in the A, 3 waves in the B, 5 waves in a C for a flat, and that gives us our X. W, flat, making it a combination for our X, and then a double zigzag unfolding for our Y. I'd love to be able to put a single zigzag in there and have a simple correction rather than a complex within a Y, but the thing is, you've got to work with what you've got to work with, and although I'm a stickler for trying to break things down simply, sometimes you just can't. And the thing which makes it impossible is this move here. That's 3, not 5, so you can't go 1, 2. Alright, and you can't go A, B. You have to go 3, 3, WX. Okay, so that's that. I have seen some people trying to suggest that this is a diagonal, but it isn't, so you're wrong, putting it simply. Not trying to be facetious, just pointing out the fact that this is 1, this is 2, and this is a contracting wedge, a contracting diagonal, right? This is 3, okay, and the 3 is longer than the 1. That's not right. Okay, can't be the shortest and therefore has to be longer than the 5, but it has to be shorter than the 1 in a contracting diagonal. Contracting diagonal is this. Right, it's this kind of shape that other highs should have gone beyond. Right, so you get a wedge, and each wave is smaller than the next. So the 1 is bigger than the 3, is bigger than the 5, and the 2 is bigger than the 4. Right, that's a contracting diagonal. That's a hard rule that has to be followed. And in this case, the wave 1 is shorter than the 3. I'll prove it to you. That's the 1, and that's the 3 going beyond the 100, going beyond the 123.6, going beyond the 131.8. So it's not a diagonal. Okay, it's not a contracting one at least. Is there argument that it could be a expanding diagonal? Yes. How does that fit in with the rest of the count? If I show you the diagonal here, you could go 1, 2, 3's longer, 4 will be longer, 5 will be longer still. Still going to break the lows, and still doesn't make any sense because we still can't express this as 3 waves. Okay, so the only way we could get through it would be to steal our initial 3 wave move, change it into a 5 somehow, which I can't see. This would have to be 1, 2, 3, 4, 5 to here somehow, a joining flat in a B, and then a diagonal, expanding diagonal. I can't see that, so I don't think diagonal, expanding or contracting is an option here, because if it's contracting it's breaking the rules, if it's expanding it doesn't fit the prior correction, as I see it at least. So I see W, X, Y combination, with the final part of it being a double zigzag and the intermediate part, the X wave, being a flat. Now if we measure the flat, it is a little extreme. So if I take the length of the A and I set it up for a flat, you can see we go beyond the 123.6 and the 131.8 for the B, but we don't go beyond the 1618, right? Which I still consider a legitimate target for a B. So we're not that long in the B, but we are quite long. The C is also very big, not massive, but very big. Goes beyond the 1618. Doesn't go to the 2618, but it goes beyond the 1618. So it is a big wave C, very big. But it's all legit. We can get a flat in there. Alright. So now it's a question of how much lower do we go? Well, it's a question of being a double combination rather than a double zigzag. It doesn't have to go as deep. It can finish kind of around the previous lows and be happy with itself. If we measure, though, the one-to-one relationships, we will all, I think, in all cases end up deeper, significantly deeper. So if we take the W from the Y, the W projected from the X, we can see that we will finish not far beyond the previous lows. We know that also matches up with the 50, right? The 50 here, the blue line, about the conversation I just spoke about. If we went 1-to-1, we would break the previous lows, turn everyone into a bear, liquidity pours in on the short side, and we actually bounce from the 50 and the 1-to-1 of the X out of the Y equals W projected from the X, and then we bounce and hurt the maximum number of people. So that could be a liquidity trap waiting down there. Could be. Not psychic, you know, it could be. I think I prefer that pivot of the larger wave degree, W, X and Y, than I do looking at the smaller ones. Now, that was in log, remember, so was the 50. You're not going to get that result in arithmetic. Let me just show you what I mean. Come off. Now that one is all the way down here at 8 cents. That's going to break that long-term parallel channel. But that long-term parallel was in log as well. So maybe giving the hundreds of thousands of percent move from the very start or to the very high in 2018, we have to give it the benefit of the doubt of taking the long-term measurements in log scale. And since that long-term log parallel channel is in log, then considering whether or not we've broken it should be done in log, and any confluence around it should be done in log. So let's just bring that back up, put it into log scale, bring up the long-term log channel. Here it is. Right, we are so close. A move to the previous lows could easily bring you to it. If you got the 1-to-1, you would break it, but you could wick it. before coming out of here. You could break it and it doesn't have to be the end of the world, but if it breaks it significantly and back tests it, that's bad news. I think at the end of the day, it could just be a coinky dink, but I think it's their pretty strong geometry over the long term that we've observed. So there you go. With a combination here, with the flat, double zigzag here and the zigzag here, you could argue that we didn't get deep enough in the first one, so we've got to make another low in this one to get deeper. But it could continue to become more complicated. That's also a possibility. You know, our assumption that it's free could be wrong. It could be free to here, like this, and that could be complete, and then it could be another free to here for or W, X, Y, X, another X wave, and then another free for a Z. So there's potential for this thing to just keep going sideways as well. But in the meantime, that's the best I got for you. I don't really think I've got much to offer you beyond that. So that's the alternate count for the meantime. The primary count, we just revisit it, is still the idea that we've bottomed. Okay, but it's got to get out of here, because these lows, as I pointed out with the bullish invalidation here, let's pop a price on that as well. I'll put that in that same folder. Right, if we break this low, this count's wrong. If this count breaks, we have the advantage of then being able to fall back onto our alternate count, which is this wave 2 here, which leads us lower. Yes, there's that long-term log channel to think of. Yes, there is support still below us. We've got all of these areas to watch as we fall down, but there's nothing stopping us from just coming back all the way to trend either. You know, and just seeking out the trend. That's a possibility as well, getting a deeper correction. And let's just have a look at a quick reminder of that fib retracement here. 50's below us, and in arithmetic scale, where we've got the 78.6 at the previous lows, right through the centre of that triangle. If you can't find support now or near now, you're going to struggle to find it, I think. So, yeah, that's all I've really got to say, guys. That's the new count, the new alternate at least. We'll stick with the original. Okay then, guys, I think we'll leave it there. We've gone over the two counts. We've gone over the fact that we're very close to invalidating this one. We'll wait to see if that invalidation point comes along, if it breaks. If it is, we'll revert to the other count instead and see how this develops, continues lower. And then we can come back and look at this maybe in a week's time and see what's happened. Really, do we break off of the lows here? Do we do something decisive? Alright then. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave a comment in the comment section below. And if you are interested in joining the Patreon, now's a good time. It's the start of the month. There's a little link in the description below. Head over, have a read of the tiers, see if there's anything you're interested in. And if you're not following me on Twitter yet, please do so, as I always put up a notification on Twitter when I post a new video to YouTube. As always, big thank you to my Patreon subscribers. Your support is greatly appreciated. And thanks for joining us on this technical analysis of XRP, and I'll be back with you later in the week. Bye bye.